I would not be making this video normally, since I really don't like the fear-mongering that all the generic finance YouTubers do. However, I really do think that it is plausible that we will go through a huge crash in the near future. First, let's go over the most straightforward reason. Despite what Jerome Powell and his infinite money printer tries to say, the economy is still not great. Quote-unquote higher for longer rates directly contradicts a hope that many investors had at the beginning of the year, that the Fed would have achieved a soft landing and they would start pausing. The yield curve has been inverted ever since July of last year. An inverted yield curve has been the strongest indicator of an upcoming recession that we have. It looks like the Fed's battle against inflation will continue to be brutal.
Strike to claim it, a strike to claim it. And he got it!
Are you kidding me? That's right! Who do you think you are?
Furthermore, we're coming off not only two of the best years in the history of the stock market in the form of 2020 and 2021, but a whole decade-long bull run. 2009 to 2021 was an amazing decade for stocks. Does that sound familiar? Yeah, the 1920s were the same, and look how that ended, with a 90% crash. 2022 was to be expected. The Nasdaq went up 140% in the 18 months after the beginning of COVID. Some of you might not realize how ludicrous that is, but to put that in perspective, the market goes up an average of 8% per year. That means it would take around 12 years to go up 140% normally, and yet we were able to achieve that in an eighth of the time. The market was so insanely overextended that I'm actually surprised the S&P only went down like 19% in 2022. However, like I went over in my Magnificent 7 video, which you should watch if you haven't yet, the acceleration of AI and the advent of
ChatGPT, dude.
changed everything. This is why the first half of 2023 was so amazing for big tech stocks. The Nasdaq was up 45% in the first half. However, this huge rally is showing signs of slowing down. An example to help emphasize this was Nvidia earnings in August. If you don't know, Nvidia is pretty much the most important stock in the market right now, since it is the face of the new AI boom. Nvidia absolutely crushed their earnings in August, with amazing guidance and a new stock buyback program.
The exponential performance increase is AI, and the energy source is AI. The arrival of computing and AI is timeless. Accelerated computing and AI, an important method for advancing AI.
If this was earlier in the year, this would have sent the stock up at least 30% in one day. However, even though Nvidia went up 10% after hours, it erased all those gains the day afterward. This is a perfect example of how the AI rally is losing steam. I like comparing this year to 1999. Back then, the internet was causing a huge rally in stocks and then it led to a huge crash. Now, it's AI. Look at this 5-year chart. This is such a classic double top pattern. The market was able to return back to its high in 2021 during July, but it got rejected. This shows that we will have resistance going back to new highs, further showing the rally starting to wane. October has always been the month of huge crashes. 3 most famous crashes in history all happened in October. The start of the Great Depression in 1929, Black Monday in 1987, and the start of the global financial crisis in 2007 were all in October. So maybe 2023 will add on to that list. Okay, so that's why I think the market might crash this month. There are other reasons, such as China's economic slump, but I don't think they're as significant in the short term. However, I might be wrong. In fact, I'm probably wrong. The market can stay irrational longer than you can stay solvent. I swear to God, people all say that the destruction of the global economy is here. It's so goddamn stupid. One day, it will happen. If you call for a crash every single year, you will be right eventually. However, if you try to capitalize off the crash every year where you're wrong, then you're screwed. More money has been lost by people anticipating a drawdown than in actual drawdowns. This might be a great dip to buy. We're already around like 8% down from the high back in July. Some might argue that the market has sufficiently corrected itself. The AI bubble has only existed for less than a year. Maybe it isn't time to pop it just yet. Would I use the recent drawdown to average down on my index funds and buy the dip? Absolutely. I really do think that this is a great buying opportunity for that. However, I wouldn't stake my life savings into out-of-the-money calls, because there is a chance that the recent turmoil in the last couple of weeks could continue, and it could be violent. You need to be prepared for both scenarios, because both could happen. It could be blood red or blood green, no one knows. Like I said, I really don't like making these type of market outlook videos, because the way that most people do them don't really have any actual value. However, we're in a really special situation right now, and I just wanted to express my thoughts. That's it for today's video. I hope you found this video informative or at least entertaining. Please like, comment, and subscribe to boost this video in the cruel YouTube algorithm. There's some free stuff for you in the description and pinned comment, and as always, I wish you all green portfolios and I'll see you in the next one.